So you want to buy a house? Well, you're going to have a mortgage payment. What the heck is in there? We're going to break it down for you here. My buddy Jonathan Cohen-Kurzrock's here. What's up, brother?
Derrick, always a pleasure to see you.
In the blue. I love it.
It's my power suit.
It is. It's very powerful.
I love your suit too.
Yeah, thanks,
very
man.
colorful, very, I love it. The pink, rose?
It is. I think it's pink.
We'll say rose gold.
Okay, let's do that.
Yeah.
So you're buying a house. You're going to get a mortgage payment. Congratulations on your recent home purchase as well.
Thank you.
Very, very cool to see you get into a place. And you know what? When we talk about a mortgage payment, as a buyer, like what were you concerned about? What were the things that you wanted to know that you learned through the process?
100%. Today, for me, a big thing is going back to the basics, especially since I just bought a home and it's kind of really relevant. And I think a lot of buyers want to know this. And it's what I was experiencing throughout. Just a quick plug. You were the guy who did my loan. So I wouldn't be in a home if it wasn't for Derrick. And I would also say, like, I truly feel I wouldn't be in a home if it wasn't for Derrick because he literally guided me through the process. Even though real estate is what I do every single day, a lender, loans is what they do every single day, and that's why you need to be able to talk and have someone you trust to guide you through that. And I really appreciate you.
Thank you
really, I would say you held my hand every step of the way. Like, huge. I wouldn't be in a home without you. So that's I really appreciate it.
Thanks, man. I appreciate the plug.
Going back into the loan and what's inside your payments, I wanted us to break down today what's in that payment. What I'm going through and what I pay right now is we call it the PITI, not PITI, because we're very happy to be in a home, but PITI, and that's going to be your principal, the interest, the tax, and then the insurance.
That's right. So PITI, principal, interest, taxes, insurance. That's sort of broken down. That's 4 different things that you're paying inside your mortgage payment. And it's sort of cut in half. So you have principal and interest. That's your loan amount, your interest rate, amortized over 30 years. That's what you're paying. And that payment is going to be the same every month, although it will shift over time the amount that's going to each. So it'll start with a smaller amount going to principal and a larger amount going to interest. And over time, it goes like this until you get to the very last payment, which is almost entirely principal. So you have principal and interest, and then the taxes and insurance is also referred to as impounds or impounding. Now, you don't have to do that in every case. Some cases you do have to impound your taxes and insurance, but there's really no reason not to. Some people don't like to let someone else hold their money throughout the year. They'd rather hold it themselves, and that's okay. For those people, they can waive impounds, and you don't need to do it unless you're doing an FHA loan or with a certain type of lender that won't allow you to waive the impounds. And the reason why there's no downside to it is because there's no cost. So when you pay your money, so you have taxes and insurance that are due every year, and let's say the total for those is, easy math here, $6,000. So it's $500 a month. Well, you could save up the money on your own, and then when the bills come due, you could pay that $6,000. Or you can set up an impound account, which the lender manages, the servicer of your loan manages. They cannot charge you any fees. They cannot earn any interest on the money. They cannot move the money anywhere. They literally have to keep the money in a non-interest bearing account. It is your money. It is not theirs. It's never theirs. And and they will make the payments for you. So when those payments come due, they make the payments. You don't have to worry about it. So I think most people, it's easier to impound taxes and insurance so that you just pay it into your monthly payment, and then you don't have to worry about those big bills coming up.
Yeah, I really want to emphasize that, and it's what I'm doing right now is impounding. And at first, like when you look at your mortgage payment, all of a sudden it's going to say like, and when you go to a mortgage calculator, this is why it's so different because it might not have the taxes and the insurance on the calculation. But when you go and you have it impounded, you know, your mortgage could be $3,500 a month, and you're like, wow, that's crazy, that's so much. But it also includes that tax bill when you impound it.
Right.
And that way, instead of, let's say you buy a $600,000 home, your taxes will be around $9,000 to $10,000. Instead of paying one big clump sum, or actually two different sums at 2 different times during the year, you can literally have that drawn from that $3,500. Otherwise, if you didn't want to pay it or impound it, your monthly would go down to like $2,800, which sounds much more chewable, but you don't have any of those lump sum payments for the taxes.
Yeah, so it's the same. Either way, you owe the taxes and insurance either way. You got to pay them. It's just a matter of how you want to do it. But you make a good point when we're talking about, especially online calculators, if we go down that rabbit hole, because they really can't be trusted. There's a lot of assumptions that are made on those, particularly when it comes to the taxes, because taxes will vary from area to area. And here in San Diego, we have a lot of people who end up buying in, Riverside County, for example. And the taxes are very, very different there. So it's really important when you get a payment quote in the initial phases of your home shopping process that you have those things factored in. And so we will always look up the exact tax rate for each property and figure out what that is going to be. Because sometimes, particularly with new construction or just homes that are newer, there can be Mello-Roos, special assessments, other things that are added into the tax rate that we have to go seek out and find out that they're there ahead of time, so you know, hey, this is the actual payment, what it would be like, not, oh, it's $400 less, and you find out it's $400 more later, and that can happen a lot. So especially with new construction, if you're shopping for a new construction home, you're looking at new construction homes, make sure you ask that question. What is the tax rate? Is there Mello-Roos? And then of course HOA, which HOA is paid separately, not paid inside of the mortgage payment. But we always put it in the mortgage payment quotes because it is technically part of, you know, the payment to own the home. And those things you'll pay directly. So always ask those questions. Tax rate for new construction, because a lot of it's not published yet. Tax rate, special assessments, Mello-Roos, and what's the HOA going to be? Those are the big ones, so we can get that payment as dialed in as possible.
And that's a really good point. So it kind of, what you were talking about also encompasses what all of your monthly costs could be, which is really important to have a good idea, because you're going to have your principal, your interest, your taxes, and your insurance. If you're not putting 20% down, you're going to have your mortgage insurance.
True.
So all these numbers start to add up very quickly. So it's just good to have a good grasp around that. But in addition to that, if you're buying new construction or anything less than 30 years typically, 30 years old, the construction of the home, it's going to have what's called Mello-Roos. And that could be a whole different section. It's going to have, if you're buying in a complex or any sort of planned unit development, you're going to have that HOA fees. And then you also need to be mindful of, you're still going to need to pay your gas and electric, and you're going to need to pay your Wi-Fi. And you might need to pay your sewer, and you might need to pay water and trash pickup. So those are all the costs. Some of those get bundled in with your HOA fees. These are those are just the line items. But I think those are just the line items, and it's good to be aware of every single one of them. So that way, you know, you have your monthly, but then keep in mind you have a couple extra $100 if there's HOA for your SDG&E, for trash pickup if you need it. The one thing that sneaks up on a lot of my clients, and I was hoping we could talk a little bit about it, is the supplemental tax bill.
Yep.
Every year I get a call from a lot of clients saying, hey, Jonathan, is this Dan McAllister letter legitimate, and why am I paying extra money right now?
I can't imagine the number of Google searches for Dan McAllister bill and mail. Is this legit?
Yeah.
It is. But it's always good to call. The good news is, in San Diego County specifically, we have an incredible assessor's office. The tax assessor's office is amazing. It's built on customer service. You call, you get a human being. They transfer you to a different department because you need to talk to them about veterans benefits and tax discounts for that, or Prop 6090 or 19, or any of these different tax opportunities that there are in real estate. They will send you to that department. Another human being will answer. So I've had such great luck. We actually had Jordan Marks on the channel as well, who is the taxpayer advocate for citizens in San Diego.
He's amazing.
Really, really great guy. He's a part of that. So he's a part of having built that customer service infrastructure where you can go there physically and you get service right away, or you can make a phone call and you can get a hold of someone right away.
He's taken the department leaps and bounds.
Big time, big time. Yeah, and he'll run, I'm sure, at some point. I think it's coming soon.
He should.
Yeah, he will. And he'll probably get elected because he's done a great job with it. And I don't think it's like that in other parts of the country, sorry. One of the things that makes America's finest city great, we have a great tax assessor's office. But I mean, it's a nice thing to have because you do have questions like that that'll come up. You get a bill in the mail. Hey, I thought my impounds, my escrow was going to pay for this bill. Sometimes they won't have paid it yet by the time you get the bill, but they will pay it if you're impounding, so don't worry about that. And sometimes, you'll have a certain assessment that's going to go on. If you want to know what the schedule is for that, those are scheduled ahead of time, and so you can research, you can make a phone call and say, hey, what are the current scheduled assessments for this property? And I would highly recommend that just to see what the lay of the land is.
Yeah.
Whether you do that before you buy a home or after you get into the home, because you're going to have those pretty much no matter where you buy, so it's not like a deal killer on this home or that home, but it is something that you want to be aware of.
Yeah, and just to quickly give you like a definition of what that supplemental tax is, it's actually, in my experience, in 2 disclosures. There's one page on your loan documents that describe that you'll have a supplemental tax bill. And actually, interestingly enough, it's hidden in the NHD report, which is the natural hazard disclosure. It's snuck in there saying that the county will come and reassess to make sure that you're paying enough taxes for the new value of the home. And usually it's not more than a couple $1,000s, but it's always a surprise for people when they get that bill.
Yeah.
Because you're not expecting to give a couple $1,000s. And that's why I want to tell you guys now so you know.
Yes, it's not that bill. Those supplementals are not included in your impounds.
Yeah.
And that's where it throws people off. And it's why it's always good to go ahead and ask your loan officer, go ahead and ask your professional that you worked with on this, or your bank, or whoever you have your loan with, when you receive that, hey, is this one I need to pay or not? Because also sometimes impound accounts will be overfunded on purpose. So there's always cushion built into it. And so in certain circumstances, not recently because values have been going up, so taxes have been going up, but in some cases when values may be going down or going sideways and there's additional funds in there, sometimes the lender will actually go ahead and pay one of those bills. If there's enough funds in there, you can send them the bill and they'll pay it. So it's always good to check in, with your servicer, with your bank, and say, hey, I got this bill. Should I pay this, or do we have enough funds in the impound account to pay this? As I've seen many people get those bills paid that way, which is really nice too, especially if you weren't expecting it in the first place. So be aware of it, expect it, figure out what they're going to be. If you do receive one, see if you can pay it with impound. If impound doesn't have enough, then it's going to be on you to pay it. And that's going to be the case for pretty much every property in San Diego. At some point, you're going to pay those supplementals.
Amazing. You've been extremely helpful, extremely comprehensive. I hope this is helpful for you guys. Next time, we will talk about what happens if you pay extra money down towards your principal each month.
Yeah.
That's a nice little cliffhanger.
Yeah, it was how to accelerate, how to pay the least amount for your home. That's really my goal, is to help people pay. How can I get you to pay the least amount of money out of your net earnings to own that home? And that's a great way to do it.
Thanks, Derrick.
All right. Hey, make sure you share this with your friends. Help make them smarter than everyone else. We'll see you guys soon.